And now to our next conversation. According to Bloomberg, Nigeria is at risk of losing its frontier market status. That's Morgan Stanley Capital International, MSCI, is considering downgrading MSCI Nigeria indexes to standalone market status from frontier markets. Let's discuss the reason and possible impact with Boboye Olaolu, economist and fixed income strategist at Cardinal Stone Securities. Great to have you on the program.
Thank you, and good morning.
Morning. So give us a background and the rationale behind this MSCI proposed reclassification.
Okay, so Nigeria has been on the watch list of Morgan Stanley since 2020, and that has largely been due to the FX concerns in the country, right? They highlighted some key concerns that they have. Number one is repatriation concerns and FX illiquidity. Those are the two major things that they highlighted. Other things were parallel markets premium, which remains relatively elevated. And, in our view, we think that the concerns of the MSCI is relatively valid, right? When you check in terms of FX liquidity in the economy, what we did was to check pre-pandemic level when we used to see dollar supply in the economy by the CBN across different windows. We saw that on an average monthly, the CBN does about $3.1 billion on a monthly basis, right? But currently, post-pandemic, right, we see that it has dropped significantly to $1.7 billion. And so this is almost half of what we used to see pre-pandemic levels. And that defines the FX liquidity situation that we have in the economy. I will see some of these dollar demands, which are relatively not being met by the CBN, moving to the parallel market premium, market. And this explains why we see huge elevated parallel market premium, moving around 38% to about 40% when you compare it to the official market. And then the last is the repatriation concerns. We have funds that are trapped into the economy. When we check the investment position in Nigeria, we saw that the equity part continues to increase. However, when we dug further into the numbers, we discovered that it was reinvested funds because those funds were unable to exit the economy, right? And these are really valid concerns by the institution.
Quite interesting, but how important is this status for Nigeria? And what do you think can be done, to not get this reclassification?
So the classification by MSCI is very much important, right? It gives a sense to the investability in a particular country because there are different factors that they look at. They try to look at the liquidity in the system. They try to look at the development of the entire economy and some other factors, right? So we have the frontier, we have the emerging, and then we have the developed market. Then we have the standalone. So if you are well ranked and well positioned, right, maybe in the emerging space or in the frontier space, it's sends strong signals to investors, which could help to support foreign inflows and foreign investments in your country. However, if Nigeria is removed, it sends a strong concern to investors that Nigeria has become a risky environment and investing is at your own peril. And that can dampen foreign participation in the market and as well as foreign inflows into the market. So what Nigeria can do not to be removed from the index is to fix the problem of the illiquidity concerns that we have. Fix crude oil production leg, which could support oil inflows, coupled with the elevated crude oil price that we have. Secondly, is to clear the existing backlog, right? Based on the last information we got from the monetary fund, that's the IMF, backlog is about 1.6 to 1.8 of FPIs. When you had unrepatriated dividend from the equity market, it will most likely be higher than that. So we think that once they clear this, it will give a bit of respite to the MSCI institutes.
What are the likely reactions from foreign funds invested in Nigeria's MSCI Frontier Market Index?
Okay, so what we did was to see if there is going to be a major impact on the market, that's the equities market, and also to judge the reaction of foreign investors. So we estimated the entire fund, that are investing in the Nigerian MSCI. When we check the numbers from S&P Capital IQ, right? So what we saw was that the total funds that are invested, foreign funds, has dropped significantly. At the moment, it's around $243 million. So we check that part that is active and the part that is passive. So for the active funds, when things are not going well, because they have in-house research analysts and then they understand the market, when things are not going well in the domestic economies, they tend to fly. But for the passive funds, they typically track the index. And when we check that passive leg of the entire fund, it was about $25.8 million, right? In our view, we don't think that this is very much significant, because when you compare it, it's just about 5% of the entire fund invested in the Nigerian MSCI index, right? And we think that this 5%, let's assume they will choose to leave the country. Of those, we saw that if they choose to leave, it will take about 5 days trading activities for them to leave. So we don't think that this is really a major, that's significant, or it will create a bit of spike or concerns in the market.
Right, and Nigeria's equity market has performed really well this year. It's actually the best performing in Africa. Could we see a reversal of gains accrued so far?
So beyond the dynamics of foreign participation in the market, what we think has been driving the market since late last year and since the start of the year has likely been locals. For context, currently locals account for over 80% of activities in the local equities market. We think that the foreign participation is relatively low. So the dynamics of these old changes in MSCI reclassification will most likely impact the foreign leg of things, and that is not significant enough to drive the market. So we think that the market will continue, the locals will continue to enjoy, good names in the local market to earn good names, good returns for themselves. So we don't think that this news or the reclassification will likely wipe out the gains that we've seen year to date. We think that investors will continue to cherry pick good names and fundamentally sound stocks.
All right, that sounds good, but we know this is mainly because of the FX shortage, we're seeing. Can we expect more FX impact with this?
Okay, so if perhaps the CBN was supplying dollars as they used to be, and the trapped funds, they have really leeway to exit the market because of liquidity, they would have been worried that we might see some pass-through to FX reserve, which could have a negative impact on currencies. But at the moment, these funds, the likelihood of them exiting is very slim, right? Because dollar liquidity is still in the system. Secondly, if you check the magnitude of the fund that are likely to exit, about $25.8 million, we don't think that this is relatively significant. When you compare it to our reserve level, over $34 billion, we don't think that this is very significant. But just to, go a bit forward, a step forward to see if the dynamics of the current liquidity system that we have will change. Based on our own projections, we think that this illiquidity will likely persist to the end of the year, except to see an improvement in foreign inflows, which we think that is unlikely, given the global risks of sentiment and as well as weakened macro fundamentals. Also, when you look at it from the export leg, we think that crude oil inflows are largely constrained at the moment because of weakened crude oil production, despite the elevated prices. So we think that the cumulative impact of all this will continue to drive the FX illiquidity that we have in the system. And this will continue to send wrong signals to investors and a bit of worry for investors that are invested in Nigeria.
All right, but do you have any, inferences from a similar action in the past or from, other countries that have actually, been through this?
Yeah, so when we checked 2 countries, 3 countries basically. Number one, it was Russia. That was the latest that was removed to stand alone. We know that Russia has a peculiar issue because of the invasion in Ukraine. So when you remove that out of the numbers, the last 2 that was done was Argentina and as well as Lebanon. When we check those 2 markets, though they have different peculiarities, but the factors seems a bit similar to that of Nigeria. You recall Argentina about 3 years ago had issues with FX concerns, FX illiquidity, which is very much similar to Nigeria. But what we saw during those periods is very much similar to Nigeria. The passive funds were the ones that were really much trying to exit, which had a worsening impact on currencies. But we saw that after the reclassification, 6 months after, we saw the markets touching relatively new highs in those two countries. And what we're able to deduce from that is the impact of the reclassification was relatively minute. I would think that would be the same thing that would play out here in Nigeria, because those funds are not large enough to drag the equity market or affect the foreign exchange markets.
All right, let's hope we maintain that status. Thank you so much, Boboye Olaolu, economist, Cardinal Stone Securities. Great having you.
Thank you for having me.